Hello and welcome back to Crypto Saving Experts, where we talk about the latest cryptocurrency news and take a look at the markets so that we all know exactly what is happening. My name is Jess and we do these live streams every single weekday. I'm sure we've all got big smiles on our faces this morning because Bitcoin is up at $44,688. Where did that come from? We'll talk about this today. We'll take a look at what's been happening on the smaller time frames, how we've had this nice move to the upside, what this means for the Bitcoin price, and we'll zoom out as well and take a more detailed look at what's happening in terms of the 4-year cycles, because things are looking a little bit different and that concerns me a little bit. So we'll be talking about that today, and of course we'll go in about all of the cryptocurrency news, talk about those spot Bitcoin ETFs, talk about the comparison from the Bitcoin ETFs to gold. We'll take a look at the Ethereum ETFs and some general cryptocurrency news today as well. So make sure to stay tuned until the very end to educate yourself about the cryptocurrency space. In the chat, we've got Rob all the way from Egypt, getting his daily crypto updates while standing in the pool. What a nice time. What a lovely thing to do. We are having extreme amounts of rain in the UK right now. It's not nice at all. Monkey Nut says, morning from snowy Ireland. We've got all the weather today. Boris says, good afternoon from the very warm Philippines, 30 degrees Celsius breeze, no humidity. You're all living the life I want to live. I'm here in the rain. It's very, very cold, very, very rainy. I want to be somewhere warm and hot. But maybe one day, when Bitcoin goes to $100,000, We'll be somewhere on a beach. Let's see what's going on for the prices here today. So we've got Bitcoin to $44,688. This is up 3.6% within the last 24 hours. Ethereum is up nicely as well, up 2.16% to $2,422. And we've seen some really nice gains in the altcoin market as well. So with BitTorrent, BTT up 35% there. We've got Stacks up 12%, eCash up almost 11%, and Huobi's token, HT, is up almost 10% there. We do have some tokens with some small losses here, but not considerably. We've got Monero there, but that has just been delisted from Binance Exchange, so that is kind of the reason as to why we're seeing a little bit of a downfall for Monero right now, and a couple of other tokens. We did discuss that in yesterday's stream, but on the whole, things are looking good. Things are looking up. What strikes me is the most interesting in this list right now is Solana is up again. Solana is up another 6% to $101. Now, this is the network that just was down for 5 hours. If we take a look at the daily chart here, it's had a massive pump. I don't understand Solana at all. It blows my mind. Basically, the network went down. Nobody could make on-chain transactions for 5 hours. People that weren't holding their Solana-based tokens or Solana on exchanges and had to make on-chain transactions could not move their cryptocurrency. No transactions could be processed on the Solana network. So yeah, you would assume that this is a bearish thing to happen. But as I keep saying on the stream, and this is the reason why I did not trade this event, Solana always does what you least expect. When FTX first said, look, we are pausing withdrawals, Solana absolutely tanked. And I thought, you know what, this could be the end for Solana. Solana's had loads of outages in 2022, and in February 2023, they had another one. And we've seen FTX hold a huge amount of this token. I don't think this can make a comeback. And then it did. It did, and it's absolutely exploded within the last couple of months. This token has continued to shock me. I do believe it has a lot of VC investment, and maybe this has something to do with that. But it always does the opposite to what you expect, and not in the same way as Bitcoin. Bitcoin does the opposite to what you expect, but you can kind of see why. With Solana, it's just constant controversial moves that don't make sense. Interesting token there. It's up again. Congratulations to all those Solana holders. That's all I can say. It's not a token I have invested into. I don't know if I will invest into it. I never say never, right? But there's lots of other tokens out there that I believe in much more, and I think that's important when building your portfolio. Boris says Solana will surpass $200, and the fact it went down, it didn't hurt at all. I love Solana, and I think with a bull market, all of these tokens can see nice gains. That's not me saying I don't expect it to do well. I just always like to invest in tokens that I believe in long term. If somebody says to me, you can't touch your portfolio for 10 years, what tokens am I picking? for me personally, Solana wouldn't be in it. But you honestly, you never know with crypto. Let's see what else is going on though. Let's move on from that because Solana's back up and running. It hasn't really affected the network. This is like the 11th time we've seen the Solana go down or something silly. Solana's still performing well. It's still building a really great ecosystem. Lots of tokens on the Solana network are pumping and have been pumping within the last couple of months. I don't think this is the end of Solana. It's just a little bit more ammunition as to why I want to stay away, but I was already making that decision anyway. Let's see what's going on in the chat. Cryptic Sniper says, congrats to all my Solana sisters. And Jason Smith says, good evening from Australia. Why is everyone somewhere warm when I'm sat in the rain? It is not fair. Let's see what's going on here quickly for the price of Bitcoin right now. So we will analyze the price of Bitcoin at the end of today's stream, but you can see right now, it is looking like it could potentially be in to break a level of resistance. And this is not what we were expecting. We did say in yesterday's stream, in all fairness, we have a huge amount of liquidations that would occur if Bitcoin went up to $44,000. So in the shorter term, we were looking at with more of a bullish outlook in yesterday's stream. That is what we've seen. But I wouldn't have expected it to be this bullish. I was thinking, look, we are going to go up here, liquidate those traders at that point there, and then maybe see a little bit sideways action, maybe a little bit bullish momentum. But that bullish momentum has continued through. We've liquidated those traders and Bitcoin is still going up. Bitcoin likes to take the path of most pain. So when we look at the liquidation heat map and we see a lot of traders will be liquidated at these price points, you think, brilliant, like that's a magnet for the price of Bitcoin. Bitcoin's going to go there to liquidate those traders. And Bitcoin did, but it exceeded that point. It went further than that. And it's gone even higher than that. And that's really, really shocking. And I will explain to you why this is shocking right now. And this is because of the Bitcoin halving. Bitcoin halving is approximately 63 days away. And with that in mind, we can be very excited about what's to come because typically a Bitcoin halving triggers a Bitcoin bull market. But in the months prior to a Bitcoin halving, Bitcoin isn't always the most bullish. So if we go to the Bitstamp chart, we'll be able to go further back than this. If we go to Bitcoin halving events indicator, we get that on there. I've got this up 3 times now. That is not necessary. If we take a look at the weekly chart here, you can see that in the months prior to a halving, Bitcoin typically isn't the most bullish. Well, in the previous halving, we should say. So if we take a look from the high that we saw post-bear market, pre-halving in the last cycle, we had about 330 days of sideways action / downwards momentum. Now we have not seen that here. If we look at the previous halving before that, you can see that we were bearish for about 28 days prior to the Bitcoin halving. So maybe we should be looking more at something like this. If we take a look here as well, we can get an indication of what's been happening here. So prior to the first halving, we were looking at around 112 days. So to be honest, this does really, really vary. But what we can say and build a consensus from all of those previous halvings is that if we put a vertical line on where the Bitcoin halving is meant to be, this is where the Bitcoin halving is meant to be. On every single Bitcoin halving over the month of the Bitcoin halving, we've seen bearish momentum. It's not been a short-term bullish event. Long-term bullish event, yes, we're seeing the inflation rate of Bitcoin be halved. That is bullish. But in the short term, typically, we're going to see something like this if the pattern is going to stay the same. Now, right now, Bitcoin has had a brilliant last 14 months. It's been absolutely insane. And throughout this whole period of time, I've been looking at this and I've been saying, I don't think Bitcoin can go much higher than $50,000 pre-halving. And I do still stand by this. But we are having a lot of bullish momentum right now. And this is not what I anticipated. I think on the bigger time frames, I'm very much more inclined to believe we will see some sideways action and maybe a little bit of bearish momentum here. It would be unusual and it would be pretty surprising if Bitcoin just rallied into the Bitcoin halving. But as we said, you never know with Bitcoin. You never know with Bitcoin. If we take a look, this is a good idea. Let's take a look at the percentage change between the high pre-halving. I will explain this better by just doing on the chart. So if we take a look at the previous cycle here, you can see that we had 2 cycles ago, we had a high of $20,000 and the highest price we got to pre-halving post-bear market. Oh, let's get rid of this. Post-bear market was at $13,800. So if we take a look at that, we are looking at about a 30% decline from the all-time high. If we do the same for the previous cycle, so we take the high from the bull market and then look at the pre-halving high, we have about a 13% there. Now, if we do the same here, so if we go from here and we go down 30%, we are looking at around $48,000. So if that pattern is going to stay the same, I do believe that $50,000 pre-halving is a nice price target to like the highest that we will reach. That's not saying it's set in stone, it's definite, but if we look at previous cycles, that's a pretty strong estimate to have, that look, $50,000 is the ceiling for the next 2 months. And then after that, yes, we can all be celebrating because the Bitcoin bull market should, fingers crossed, have finally arrived and we could see some nice price action. Now, just because we're bullish today does not mean that we should take bullish for the foreseeable future. This is what I want to highlight here. What we have right now is 2 months until that Bitcoin halving. I don't think it will be shocking if we do see sideways action or bearish momentum a little bit here as well. So let's go back to our levels of support and resistance to talk about those here. Right now, we are in a resistance zone, so that is between the $45,000 level and the $44,200 level. If we see a daily candle close above that $45,000 level, we could be in for even higher prices, and that would be absolutely insane. It is Thursday, and that makes me a little bit cautious because we are approaching the weekend. Typically, the weekend we are going to see some sideways action, so not feeling super bullish about what could come here unless we do see some really strong movements within the next 2 days. In terms of next level of resistance, we have a couple that we can look at on the smaller time frames, but on the daily time frame, we're looking at $47,000 and that $49,000 level. In terms of levels of support, if we do get rejected from this zone, which we may do, we have seen frequently that, look, for example, this candle here, let's get the pen out, this candle here, we saw price action to the upside and then came down, didn't even close the daily candle above this level here. We have not yet seen this daily candle close, so we can't say where this is going to end. This may all just be creating a wick, who knows. So let's say that we do get rejected from this zone at some point today or tomorrow. We could be looking back down at these levels of support. We have an important zone of support here, so let me pull this out. We're looking at between 42,000 and 40,800. Strong level of support. We have said this numerous times. We've bounced off this with a lot of momentum every time we've touched it. So I think this is a really strong support to be keeping an eye on. If we do break down below that, we're looking at $38,000. Below that, we've got $35,500. And below that, we've got $34,000. Now, I do have reason to believe that we will actually hit that $34,000 level pre-halving. And that is because if we go to the 6-month chart for Bitcoin, you can see that a huge amount of traders will get liquidated if Bitcoin touches that $34,000 level. And as we all know, Bitcoin takes the path of most pain. Jason Smith says, Bitcoin is in a small bull trap, a slight rise to about 44K, then a liquidation drop to around 38K, sit flat for a while into the halving, then boom. Do you know what? Honestly, I would not be shocked if that is how it plays out. I would not be shocked if that is how it plays out. I'm not turning super bullish at this point because we're seeing this kind of short-term bullish price action. I'm still being cautious, and throughout this whole period of time, what I'm doing with my portfolio is the exact same as always. Dollar cost averaging in, dollar cost averaging out, trying to position myself so I won't be emotional if Bitcoin goes up or down, and just trying to take advantage of the different opportunities that are in the markets right now. Now, if we take a look at Ethereum as well, we will get onto the cryptocurrency news in just a couple of minutes. I just want to take a look at what's been going on with Ethereum because I want to take a look at how it's performing against Bitcoin. Now, in previous cycles, pre-Bitcoin halving, in those months prior to the Bitcoin halving, this is when we've seen this chart bottom out. Now, if this chart's moving to the upside, Ethereum is outperforming Bitcoin, and if it's moving to the downside, Bitcoin is outperforming Ethereum. Now, we see this chart bottom out pre-Bitcoin halving on the previous cycle, and you can see that in this cycle, it was all a little bit different, but if we zoom in a little bit here, you can see pre-Bitcoin halving here, we also saw this chart bottom up before we kind of saw that rally there. if we take a look at the previous halving, I think this is best. Where's everything gone? Here we go. We're far too zoomed in here. So previous halving, what we saw is Bitcoin outperform Ethereum. A couple of months prior to the halving, this reversed. Ethereum started to outperform Bitcoin, and we did see some altcoins really perform well there. And this is something that I believe could happen this time around. So if we put the Bitcoin halving in April here, you can see that Bitcoin has been outperforming Ethereum. This is why I've chosen to invest in Bitcoin throughout this period of time. We are now in the months prior to the Bitcoin halving. We have started to see some bounce already. So maybe this is the bottom here for this chart. Maybe this is the time where Ethereum is starting to outperform Bitcoin. And with that, we can see some high cap coins start to outperform Bitcoin as well. I do think this is really possible. And this is why I'm starting to look at diversifying a little bit more, and why I want to start paying attention to some altcoins versus Bitcoin. So we can take a look at Chainlink, for example. Chainlink has been performing incredibly well within the last couple of weeks. It's absolutely soared after it got out from a level of resistance on the US dollar chart. If we pull this up, it was under a level of resistance for about 530 days. If we pull that up, you can see across there, and we got under this level of resistance on the 9th of May. 530 days it was under that level of resistance, but since it's broken above it, we're up 130%. Chainlink has been performing incredibly well. One of my favorite high cap coins there. Let's take a look at some other high cap coins and see how they are performing too. Somebody's just said in the chat, Cardano is performing really well right now. All of these lines are super old, but you can see here that's Polkadot's performing pretty nicely as well. If we take a look at Cardano, here we go. You can see that's having a nice pump today too. On the 1 hour chart, incredible pump there. If you take a look, we are up 11%. So it's not bad to be in crypto today. I'm sure we've all got big smiles on our face. Good morning, PG. Thank you very much for tuning in as always. Rob says, what, not warm to you? It's only 4 degrees Celsius here in UK and raining. It's not nice, is it? We should live somewhere hot and sunny. But let's take a look at what's going on in the cryptocurrency news today. That's what we're all here for. Let's see what's happening, because Bitcoin's up. We're all feeling positive. But why is Bitcoin up? So first of all, we have seen whales accumulating Bitcoin on big scale right here. So what we can see is continuing advances for US stock markets, also likely supported risk assets like crypto, with key indices making new all-time highs. But if you take a look at this, Bitcoin addresses with over 1,000 Bitcoin grew significantly over the past 2 weeks, one analyst has stated here. So we're seeing the amount of whales for Bitcoin increasing. Could this be off the back of the ETFs? Well, potentially. We could be seeing people saying, well, BlackRock are into it, Fidelity are into it. We need to get into it now too. And these are massive institutions that we're talking about here, choosing to accumulate Bitcoin. You can see on this chart here, if we click through onto Twitter, Bitcoin whales are accumulating more Bitcoin. Around 73 new whales now hold 1,000 Bitcoin or more, marking a 3.6% increase in 2 weeks. So if you take a look at this chart, this is the orange line is the addresses with a Bitcoin balance above 1,000 Bitcoin, and this is the price of Bitcoin, this black line here. So you can see this has had a significant increase within the last couple of weeks. So we're seeing the excitement around Bitcoin increase and the confidence in Bitcoin increase. Whales aren't accumulating this much Bitcoin if they don't have confidence in the future of the asset. So this is why we are seeing some slight moves to the upside here, and it's really positive to see. We all like to see confidence in the price of Bitcoin. Let's see what else has been happening here though, because we have also seen, obviously, excitement around these Bitcoin ETFs as well. And some people are saying, look, this rally could be off the back of those. So let's take a look at this. The Bitcoin price is currently at a price point that we have not seen since prior to the Bitcoin ETFs being approved. Now, why are we currently up at these levels? Well, we can see here that recent gains may partly be due to anticipation of spot Ethereum ETFs. We did discuss those yesterday. Ethereum ETFs could be coming as soon as May. It's a bit uncertain whether they will be approved by the regulators in the US, the SEC. Analysts are saying, look, there's a 50% chance we will get them in May, but there is possibility there. So May is the first final deadline we get for these ETFs. I believe it's VanEck that have got the first deadline, but don't quote me on that. We did discuss that in yesterday's stream if you want to check that out. But Ethereum ETFs could be creating hype for the markets. We all know what the anticipation of spot Bitcoin ETFs did to the market. So we can see, look, if the if the chances of a spot Ethereum ETF increases, we could see a lot of excitement in the anticipation of those as well. And maybe this is already the excitement in the anticipation of those, according to this article. So continued inflows into spot Bitcoin ETFs may also affect Bitcoin prices. Bloomberg ETF analyst James Seyfart's latest data indicates that spot Bitcoin ETFs have seen $1.68 billion in inflows after considering Grayscale's GBTC outflows. Bitcoin locked-in ETF trusts can increase prices by creating greater demand for the remaining supply among investors. So we're looking at supply and demand there. BlackRock, Fidelity, Grayscale, all of these ETF issuers are accumulating Bitcoin, essentially removing them, not removing them from circulation, but taking them away and storing them away for a long period of time. And the amount of available Bitcoin on exchanges is decreasing as a result of that. And we are seeing analysts say, look, within the next 18 months, we could see a supply shock. And this is where the demand for Bitcoin is increasing, the supply is decreasing, so the value absolutely rockets. And that is what we've all been waiting for, and where we've all been looking for mass adoption of cryptocurrency. Of Bitcoin. Approving Ethereum ETF won't face... Oh, you've retracted your message, Whole City Group. If you say that again, I'll take a look. Let's see what's going on here. So the spot Bitcoin ETFs see the 9th consecutive day of inflows, with Fidelity leading the charge on the day. So if we take a look here, the Bitcoin ETF products witnessed a solid net inflow, marking the 9th consecutive day of net inflows. Now, this is really good to see, because we were all saying, look, Grayscale were dumping about... I want to say 300 Bitcoin per day, on average 350 Bitcoin per day. We did put a TikTok post up about this. Let's pull this up. If you don't already follow us on TikTok, make sure to check out Crypto Saving Expert on TikTok. I post on there every single day talking about what's going on in the cryptocurrency markets. And I did do a post 2 days ago about the ETF. So Grayscale is selling approximately 350 Bitcoin per day, and this is equating to around $15 million. And that was true for the last 2 weeks, I think, based on data from a couple of days ago. So Grayscale has had a huge amount of outflows. We all know that. We all know that this is down to FTX selling a lot of their Bitcoin, their stock, and it's because people are looking and going, do you know what? I've made an arbitrage trade with GBTC. I've taken advantage of that opportunity. The advantage is no more, and there are ETFs with lower fees elsewhere. So I'm looking to move out of Grayscale and potentially go into an alternative ETF. So we have seen a huge amount of outflows for GBTC, but as a whole, in the last 2 weeks, does this say? In the last 9 days, we have seen a net inflow. So the inflows from the other ETFs have managed to cancel out the outflows from GBTC, which is really important. And I think we also should highlight here, Grayscale doesn't have an unlimited supply of Bitcoin in its product. Eventually, the selling pressure is going to slow down. It's not going to last forever. And when it does, if the inflows can continue to be as strong as they are for the alternative ETF products, we could see a huge amount of Bitcoin flooding into these ETFs. And as I've just said, analysts are predicting that we could see a supply crunch for Bitcoin if this continues, because the amount of available Bitcoin on exchanges is going to decline, especially when you consider as well that the inflation rate for Bitcoin is about to be halved. Bitcoin block reward is about to go from 6.25 to 3.125 in the middle of April. And that inflation reduction is going to add into the idea of a supply shock being sooner than a lot of us anticipated. Let's take a look at what's going on here. Whole City Group said approving Ethereum ETF won't face much delay like Bitcoin ETF. I'm not sure. I'm not 100% convinced. I do believe the SEC will put these products off as long as possible, just like they did with the Bitcoin ETFs. We know that the SEC still aren't super pro-Bitcoin, pro-cryptocurrency. They've launched the Bitcoin ETF products. They did kind of put out a comment at the same time as that saying we do not endorse this at all. Current ways of buying Bitcoin are on exchanges that we believe are unregistered securities exchanges. We want to give you an alternative to get exposure to the volatility of Bitcoin, but we do not endorse the underlying product. They have very much put a stance of we've had to let these Bitcoin ETFs go live, but we really don't endorse them at all. And I think with Ethereum ETFs, they could try and stretch this out as long as possible like they did last time. But who knows? This is the SEC. We'll see. Let's see what else is going on when it comes to these Ethereum ETFs. So ARC21 Shares has updated its spot Ethereum ETF application to add staking. So ARC21 Shares has refiled its S1 form with the US SEC to include the cash redemption model and staking. Now, I'm sure we've all spoke about the different models there are in ETFs. Essentially, you can have a cash creation model or an in-kind model. And the difference between the two models essentially is, for example, for the Bitcoin ETFs, for a in-kind model, you can swap your actual Bitcoin for Bitcoin ETF shares, and you can just swap directly between the two. Now, for a cash model, what happens is you cannot do that. You cannot swap your Bitcoin for Bitcoin ETF. Instead, you need to go from Bitcoin to cash to ETF, and then back from ETF to cash to Bitcoin. And you have that middleman of the cash, essentially. Now, the SEC were very strongly, they were very much of the opinion that the Bitcoin ETFs needed to be a cash redemption model, not the in-kind model. And we did see all the issuers of the spot Bitcoin ETF applications changing from an in-kind model to a cash redemption model to try and get those ETF applications over the line. And now we are seeing similar movements being made here when it comes to these Ethereum ETFs. But the interesting one here is adding staking. So let's take a look at this. The latest S1 filing from the ETF issuer also suggested incorporating staking into its spot Ethereum ETF. The sponsor may at times stake a portion of the trust's assets through trusted third-party staking providers. So ARC21 Shares hopes to stake Ether from the trust's cold vault balance, with the trust receiving staking rewards as income. The company has noted the risks associated with staking, including potential losses via slashing and possibility of locked up ETH for extended periods. Alongside fellow analyst Eric Boltunus, this analyst has recently reduced the probability of a spot Ethereum ETF approval in 2024 from 70% to 60% on the 30th of January. So this would be brilliant. I think having an Ethereum ETF, which includes the issuer actually staking those products, is a really interesting concept. I think it would be important. Obviously, we would have concerns over, once again, the centralization of this, because these ETF issuers could be holding a huge amount of Ethereum, staking a huge amount of Ethereum, controlling a lot of the baskets of Ethereum that is being staked, essentially. And there are already concerns around the centralization of Ethereum since it has transitioned from proof of work to proof of stake. So they're the initial questions that I have when I read this article. But it's an interesting concept to get people that don't want to interact with the blockchain, give them the ability to see the rewards of staking. That is also assuming that the issuer is going to distribute those rewards and not keep it for themselves. So there's lots of questions that arise when we see this kind of article, if they can all get ironed out and they are all in favor of Ethereum. I'm sure we could see some positive things coming here. But they're my initial thoughts. As you can see, analysts are kind of reducing their probability of a spot Ethereum ETF going live here. I think by adding models like staking and other things into these Ethereum ETF applications, it's gonna put the SEC off. It's not gonna make it easy for these ETFs to be approved. Let's see what's going on here in the chat. Bina says, Casper is also doing great. PG says, morning all. Good morning. Thank you very much for tuning in. As always, please don't forget to like, subscribe, and hit that bell notification button so you don't miss the latest cryptocurrency news. The phone is away from the mic. I don't know why we keep having these problems. It might be. Sometimes I need to just clap down my microphone. Sorry for anybody that had headphones on there. That wasn't perfect. Sometimes I just need to clap down the microphone and it works again. I have all the equipment that you can possibly need. I don't understand why sometimes it goes a little bit funny. But let me know if that's okay. Let's take a look at what else is going on in the cryptocurrency news here. So MicroStrategy have bought even more Bitcoin. We spoke about this yesterday. They've been accumulating since 2020, just dollar cost averaging in. They've bought as high as $59,000 and as low as $16,000, just adding to their Bitcoin bags. And now Michael Saylor is trying to point out why people should be looking at MicroStrategy as an investment opportunity rather than these ETFs, because We have seen MicroStrategy's stock suffer following the ETF launch. MicroStrategy's stock has fallen 22% year to date, even as the price of Bitcoin is about flat. So it's not brilliant for them to see, because obviously they're spending huge amounts of money accumulating Bitcoin. But in their presentation here, they've said, look, we have created a document to show why you should invest in us and not spot Bitcoin ETFs. And I would like to highlight these are two completely different products. A spot Bitcoin ETF is a product that allows you to gain access to the volatility of Bitcoin and gain from the volatility of Bitcoin, or lose from the volatility of Bitcoin. I should say get exposure from the volatility of Bitcoin, rather than MicroStrategy, which is investing in a company, an operating company. Some people see that as a pro, some people see that as a con. I think having a diverse portfolio is always important here. During cryptocurrency bull markets, cryptocurrency related stocks often reflect what's happening within the cryptocurrency markets. So cryptocurrency mining companies or exchanges that are publicly listed like Coinbase, their stocks typically reflect the price of Bitcoin, and sometimes in a more volatile manner. If you invested in a mining company that survived the bear market when Bitcoin was at like $16,000, a lot of those mining companies have outperformed Bitcoin since Bitcoin's recovery, because investing in a mining company at that time was taking on a whole lot more risk than just investing in Bitcoin. You can see the same for cryptocurrency related exchanges as well. All of these companies, their stock price typically is related to the Bitcoin price. But with companies, I personally believe you are taking on that little bit more risk, but sometimes you do see that reward as well. If you are interested in that, I'm going to drop the link to this in today's live chat, so make sure to check that out. A lot of people come into cryptocurrency and only invest in cryptocurrency. I very much do that. I find it really not as, I just know what the cryptocurrency market is like, how volatile it is, and the opportunities there. I feel comfortable investing in cryptocurrency. Investing in the stock market is something I'm less certain on. So investing in cryptocurrency related products is definitely something that I can feel confident about and can do my research about with a lot more confidence and conviction. But with cryptocurrency related companies, as I've said a couple of times now, they are typically related to the Bitcoin price when it comes to their stock price. And I do believe you are taking on a little bit more risk with a lot of these things, but sometimes you do get some bigger rewards. Let's take a look at what else is going on here, because this analyst has said investing in gold via Bitcoin is cheaper than ever. So we can see here that actually, if we take a look at this article, the newly introduced Bitcoin ETFs provide an even cheaper way to invest in gold, a digital version anyway, as all but one charge a lower fee to investors than the biggest gold ETF. So what essentially the point of this article is, the biggest gold ETF has higher fees than the majority of the spot Bitcoin ETFs. And when you're looking at that and you're looking at Bitcoin as digital gold, it can make you feel pretty bullish about these products. So just an interesting piece of information there. We don't need to go into all of the detail of this article, but I just thought we'd highlight that today. Gold ETFs have a higher fee than the majority of the Bitcoin ETFs. Bitcoin ETFs have exceptionally low fees, though. We do have to point that out. There was a lot of competition in the market when they went live, so a lot of the issuers were competing to have the lowest fees and putting down their fees as much as possible. The low fees won't necessarily last forever. The Bitcoin ETF issuers, a couple of them have said, look, we'll have X amount of fees until the volume hits this amount, and then we'll go back to what we had planned. So there is competition when it comes to Bitcoin ETF fees right now. As that competition kind of subsides, we may see the fees go back up again. But right now, investing in gold means you need to pay more fees. So I see this as a win for the cryptocurrency space. Let's take a look at what else is going on, because I think we should move away from these ETFs now. Let's not forget, please, to like, subscribe, and hit the bell notification button just so you don't miss the latest cryptocurrency news. We do these live streams every single weekday. We have done for a year and 2 months now, and it's been a lovely process. We've built a really nice community here, and we are all staying up to date on what is going on in cryptocurrency. I also would recommend you go to CSE Plus Discord and check that out. Here on these live streams, we talk about the price of Bitcoin, Ethereum, a couple of high cap coins, and we do a deep dive on the latest cryptocurrency news. In our CSE Plus Discord, we look at the most recent trends in cryptocurrency, what sectors are performing well, what's coming, what airdrops are coming up, and what airdrops we should be paying attention to. And there are some brilliant traders in there as well, sharing their expertise and making a lovely community over on the CSE Plus Discord as well. So if you want to check that out, go to cryptosavingexpert.com and then choose the, let's pull that up. So if you go to CSE, cryptosavingexpert.com, and you have a wider screen than I do. Where's it gone? Where has it gone? CSE Plus, let's see. Why can't I find it? I mean, if I can't find it, how are you supposed to find it? If you get... Have I zoomed it? Oh, it's because I'm logged in. It's because I'm logged in. Let me sign out. Here we go. If you sign out and you go join CSE Plus, there we go. You can sign up to Crypto Saving Expert Plus and get access to that Discord channel. So I will drop the link to that in today's live chat. Make sure to check that out if you have not done already. Let's see what else is going on in the cryptocurrency space. So, interesting article here. I'm really enjoying talking about this right now because the Bitcoin halving is coming up, and that is essentially where the block reward for miners reduces from 6.25 to 3.125. So essentially, mining companies compete to make blocks to add onto the blockchain, and every time they add a block onto the blockchain, they get that Bitcoin reward. Now, the Bitcoin reward is halved every 4 years, approximately. It's every 210,000 blocks. But when that Bitcoin reward is halved, all of these miners kind of go into a panic. There's always articles every single 4-year cycle that's like, these mining companies won't survive when the Bitcoin reward halves, because these mining companies pay for all their hardware, they pay for the electricity, they pay to run fans, they pay for the rent of the warehouse. They've got a large amount of outgoing, so they need to make sure that they are mining enough Bitcoin to cancel out all of their expenses and make some profit on top. Now, in a bear market, this is very, very difficult, and post-halving, there are a lot of fears around mining companies not being able to sustain their mining practices. Those articles are nothing to worry about, in my opinion, because if these mining companies say, do you know what, we cannot operate anymore, what will happen is they will turn off their mining rigs, and suddenly the amount of energy being pushed into the Bitcoin network will reduce, and the difficulty to mine Bitcoin will reduce, and therefore those mining companies that have that slightly weaker hardware will be able to mine Bitcoin and earn some of that reward. And essentially what could happen is we would see more decentralization. Now that's in the worst case scenario for these big mining companies. At the end of the day, a lot of these big mining companies kind of get a little bit fearful, do all of the math to work out how high Bitcoin needs to be for them to continue to operate, and then the Bitcoin halving arrives. They double down on their hash rate sometimes, which we'll speak about in just a second, and typically the price of Bitcoin increases so they can continue to operate. Obviously, it's not a 100% certain scenario there, but we have historically seen Bitcoin's price increase after a bull market, meaning that mining companies continue to operate as they were, and because the value of their 3.125 Bitcoin will be higher than it was before, and we can see them just continue to operate as always. So let's take a look at this article here, because CleanSpark, which is a mining company, is looking to double its hash rate in preparation for the Bitcoin halving. So let's take a look here. CleanSpark is poised to double its hash rate for the first half of the year. Hash rate is basically the amount of energy being pushed into the mining company. When you're mining Bitcoin, you have your computer trying to solve a really complex cryptographic puzzle. And if you solve that puzzle first, you can add a block onto the blockchain. Now, to solve that really complex puzzle, the amount of the higher the hash rate, the better your chances. So this increase is set to occur due to the Bitcoin miner introducing the purchase of 4 new mining facilities. So they've doubled down on this decision. And I think as a mining company at this point in the market, smart play from in my opinion. On the 6th of February, CleanSpark disclosed the acquisition of 3 Bitcoin mining facilities in Mississippi for $19.8 million, which upon finalization will yield 2.4 exahashes per second. Now, obviously, running these new mining facilities will increase their outgoings, but over time, if you can become a profitable miner, it can be a very profitable business model. So let's see here. Their shares observed a 12% surge on the day following the announcement. They are looking to increase their hash rate prior to the Bitcoin halving. The more Bitcoin they can mine, the better, essentially. But you need to make sure that you are balancing your inflows against your outflows like any normal business. With a Bitcoin mining company, you have the electricity cost, the hardware cost, the rental cost, the warehouse or whatever it is, and to run the fans to keep the hardware cool, and the income you have is the Bitcoin that you mine. So with the Bitcoin you mine, currently they are mining 6.25 Bitcoin at a price of $44,761. Post Bitcoin halving, they will only be mining 3.125 Bitcoin, but if the Bitcoin halving does trigger a Bitcoin bull market like we've seen historically, and Bitcoin sees new all-time highs, we're no longer too concerned about the discrepancy there, because the price of the Bitcoin coming in starts to look similar to what it did before. And that's what's happened in previous cycles, what I believe will happen again. If it does not happen, as I said, some of these larger mining companies with the huge amount of outflows, expenses, may not survive. But in that scenario, what we would see is more decentralization for the network. So either way, Bitcoin network's not just going to disappear off the face of the earth. That's what I'm trying to say. But honestly, I'm looking at the 4-year cycle still. Let's take a look at what else is going on here in the cryptocurrency news. How long have we been on today's stream? 42 minutes into today's stream. Let's see what's going on here. We do have a couple of articles that we are just going to run through at the end of today's stream here. So blockchain could save consumers $74 billion a year on credit card fees, according to this report from Coinbase. So they've said blockchains could save billions of dollars in traditional transaction fees. On Wednesday, Coinbase published a blog post titled "Saving Over $74 Billion as a Start, How Crypto Makes Everyday Finance Fairer, Cheaper, and Easier." So this is initially why cryptocurrency was invented, to make peer-to-peer payment systems with lower transaction fees, faster transaction speeds. And this is what Coinbase are now trying to push that narrative with this document here. Obviously, we've seen some concerns when it comes to transaction fees and transaction speeds over time. But on the whole, blockchains really can help facilitate this and improve the traditional financial systems. So really pushing this narrative is really important, because sometimes it's overlooked by all of the utility we're now trying to bring to blockchains at the same time. Let's see what else is going on here. Cyber criminals stole $1 billion in cryptocurrency ransomware attacks in 2023. Let's take a look at this. This is a report from Chainalysis. So in 2023, cyber criminals accumulated $1 billion in cryptocurrency ransomware payments, targeting everything from institutions and infrastructure to individual investors in a series of sophisticated attacks. The latest insights from Chainalysis 2024 focus on ransomware and highlight significant supply chain breaches facilitated through the file transfer software MoveIt. So if you are interested in all this, I'm going to drop the link to this in today's live chat, but we are going to move on because today's stream is running a little bit long. New York Community Bank trading halted due to a free-falling price. NYCB stock price is collapsing here. You can see this here. Really interesting, because what we tend to see on the traditional stock market is if the price of a token is, not the price of a token, if the price of a stock is dropping too quickly, trading is just halted. This actually, we'll come back to this article in a second. This has raised a lot of questions when it comes to the spot Bitcoin ETFs, because Bitcoin is known to being incredibly volatile, and there are percentage points where, for example, the Nasdaq will halt trading on a stock if it falls a certain percentage within a certain time period. And we are all looking at that in crypto and saying Bitcoin makes those moves pretty frequently. So are you going to pause the spot Bitcoin ETF halt trading? How is that going to work? We haven't seen that play out yet, but that'll be an interesting concept there. Anyway, NYCB Community Bank has had its stock trading halted, so it's now a 27-year low. This is probably also the reason as to why Bitcoin is seeing a move to the upside right now. If you think back to March 2023, when Silicon Valley Bank collapsed and some other banking stocks saw their stocks absolutely plummet, we did see people running to Bitcoin, using it as a safe haven. Really interesting at that point in time, because Bitcoin came out of the 2008 financial crisis, and we had not yet seen it be used in a time of need, in a banking crisis. And then when that played out in March and we saw people using Bitcoin as a safe haven, that gave a lot of people a lot of confidence. That gave me a lot of confidence as well, in that this isn't just something people say. Yes, it would be brilliant to use if that were to happen. People were actually running to Bitcoin to hedge against the risks in the traditional bank. So Bitcoin is really seen as a safe haven, we could say, from taking a look at what happened in March. So now we're seeing another banking stock fall. Maybe this is probably actually got a high correlation with what's going on with Bitcoin right now. If we continue to see other banks stocks start to fall to the downside, we need to be taking a closer look at this, really. So another banking crisis pending. The situation surrounding NYCB rings chimes of the banking crisis of March 2023. The downfall of Silicon Valley Bank was the first domino of a series of banking collapses as shockwaves were sent through the US financial system. So essentially, Silicon Valley Bank had to realize a lot of their unrealized losses, and that was a huge problem. So, however, troubles surrounding banks appear to be resurrecting, despite NYCB reporting to have the backing of customer deposits over $250,000. The Financial Times did not state how much of the $83 billion was available in instant liquidity, and in the statement that the bank was working to reduce risk to commercial real estate could suggest the bank was eyeing up sales to generate cash flow. So some concerns here about what NYCB probably got some nice correlation with what's going on with Bitcoin there, but obviously we don't want too much concern to be going on within the banking sector because people's livelihoods are there. Let's see what else is going on here. So Thailand makes crypto gains VAT exempt. Brilliant for those in Thailand. And crypto investors gained $887 on average last year. So cryptocurrency investors are in profit here. Marginal gains in 2023. According to a report, cryptocurrency investors recorded an average annual gain of $887 in 2023. This is a meteoric difference from the $7,000 average loss in 2022. I mean, 2022 was a terrible year. 2023 was very, very nice to us, and hopefully 2024 is even better. But that's all of the news for the day. We can take a quick look at what's going on with Bitcoin here. You can see we are in that zone of resistance, I would say, looking at that $45,000 level as the top of that. If we see a daily candle close way above that $45,000 level today, we can be confident that Bitcoin's just on a rally now. I'm really, honestly, very much shocked. I know that in the short term yesterday we were looking bullish and we were expecting Bitcoin to move to the upside and see that what level was it? $44,000 level, but we've exceeded that massively at this point in time. I do think that is off the back of that banking news though, but if that news starts to disperse, then maybe Bitcoin will start to slow down a little bit on this rally. And we do have to remember as well, it's Thursday. Normally weekends have sideways action, so keeping a cool head at this point in time, but we will stay tuned on this. That's all we have for today's stream. So thank you very much for tuning in. As always, I hope you have enjoyed. Please don't forget to like, subscribe, and hit that bell notification button. And I will see you back here tomorrow for another cryptocurrency news update. Goodbye.